All right, let's talk about Aadhar Housing Finance. Their mission is a big one, helping low-income families across India buy their own homes. But you gotta wonder, is the business model actually working? Well, that's what we're here to find out. We're going to break down their latest performance report and see what's really fueling their incredible growth.
Okay, so right off the bat, let's hit you with the big headline number. We're talking about a whopping 20% growth year on year in their loan book. In the finance world, they call this AUM, or Assets Under Management. But whatever you call it, a 20% jump is huge. It tells you this company is growing and growing fast.
And look, this kind of growth doesn't just happen in a bubble, right? The company's CEO, Rishi Anand, basically said the wind is at their back. He's seeing a really positive environment for the whole housing finance market. Borrowing costs are down, buyers are feeling confident, and that's creating the perfect foundation for this kind of expansion.
So, that 20%, how did they actually pull it off? Let's dive into the headline numbers that really tell the story of a super strong quarter for them.
First up, let's talk about the sheer size of their operation. Their total loan book, or AUM, stood at 28,790 crore rupees as of December 2025. Now, to put that into perspective for you, that's a massive number. It really just goes to show you the huge scale we're dealing with here.
And it's not just about the total size, it's about the speed. Check this out. In just the first 9 months of the financial year, they dished out new loans worth almost 6,500 crore rupees. So this tells you they're not just a big company sitting on old loans, they're actively, rapidly expanding right now.
And here's the kicker. All this growth, it's actually profitable. I mean, really profitable. In that same 9-month window, they pulled in a profit after tax of 797 crore rupees. That's a solid 20% jump from the year before. So it's not just growth for the sake of growth, it's smart, healthy financial expansion.
Okay, so the results are impressive. We get that. But how? How does it all work under the hood? Let's pop open the engine room and see how Aadhar actually funds all this and keeps things running so efficiently. You know, to lend money out, you first have to get it from somewhere. And this chart here, it really shows you their game plan. They have a super diversified mix of where they get their cash. Half comes from banks, sure, but look at this. They also tap into the National Housing Bank and other sources for big chunks. Why does this matter? Because that diversity is absolutely key for stability. It means they aren't overly reliant on any one source. All right, let's talk about efficiency. There's this key metric called the cost-to-income ratio. It basically asks, for every rupee of income they make, how much does it cost them to run the business? And look at this. Aadhar's ratio actually got better, dropping just a little bit year over year. Now, it might seem like a small drop, but it's super significant. It shows that while they're growing like crazy, they're also getting smarter and leaner with their expenses. That is a fantastic sign. Okay, but lending money always carries risk, right? Especially when you're focused on the low-income segment. So the big question is, how does Aadhar handle that risk to make sure their growth is protected? Let's get into it.
All right, before we go further, let's quickly break down a term you're going to hear a lot in finance, NPA. It stands for non-performing asset. All it really means is the percentage of loans where people have stopped paying for a while, usually 90 days or more. It's basically the key number for figuring out how healthy a lender's loan book is.
So what's Aadhar's NPA number? It's just 1.38%. Let me tell you, that is remarkably low, especially given the customers they serve. And get this, they're not even satisfied with that. They're so confident in their systems that they're aiming to push that number even lower by the end of the year. That's impressive.
So how do I keep those bad loans so incredibly low? Well, a huge piece of the puzzle is this, their collection efficiency. It consistently stays above 99%. That means they're collecting on-time payments almost perfectly. It just proves that their methods for choosing who to lend to in the first place and their efforts to collect payments are working incredibly well.
Okay, so we've seen the great numbers, we've seen how they handle their risk, but what's the secret sauce? What's the core strategy that really ties all of this together? Let's take a look at the why behind all this success.
And really, it all boils down to one thing, a laser-like focus on the low-income segment. I mean, their average loan size is just 10.7 lakh rupees. We're not talking about fancy condos here. We're talking about making homeownership a reality for families who have steady but modest incomes. And that tagline really says it all. Ghar banega, to desh banega. When a home is built, the nation is built. That's their entire philosophy.
So how do they actually pull this off on the ground? Well, their strategy is built on a few key pillars. First, they have this massive network of over 600 branches in 22 states, and they're adding more every single year.
They also work hand in hand with government housing programs. And this is really critical. Over half of their loans, 55%, go to people with stable salaried jobs, which adds a huge layer of security to their business.
And you know what? This sharp focus gives them a pretty smart strategic advantage. The whole affordable housing market can be super competitive, but by zeroing in on this specific low-income niche with these smaller loan sizes, Aadhar has carved out a space where they just don't face as much heat from the really big financial players.
So the performance has been solid, and the strategy seems crystal clear. The question now is, what's next on the horizon for Aadhar?
Well, they've set a pretty major milestone for themselves. They are aiming to cross the 30,000 crore rupee mark in their total loan book by the end of the financial year. That is a seriously ambitious goal, and it tells you just how confident they are about the road ahead.
And that really leaves us with the big final question, doesn't it? Aadhar has clearly built this incredible foundation. It's profitable, it's efficient, they manage their risk well, and they're serving a really important part of the market. So, can they keep building on this momentum to help house millions more families across India? It's definitely a story we'll be watching.